Equity Mates.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome back to another episode of Equity Mates, or should I say, hey everyone, you are tuning into Equity Mates, and guess what? You've won a car. Just kidding, but you do get valuable advice on your investing journey. Whether you're a newbie or a Warren Buffett in disguise, we're here to elevate you from your first stock purchase all the way to those delicious dividends. If you're a first timer to our show, a big warm welcome to you. Now, my name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you?
I'm very good, Bryce. Good to be here.
That's a toughie.
As we've been doing this year, you've asked ChatGPT to play with your intro, and I've got to guess who it is.
Yeah. And you're saying yes?
I'm going to guess Oprah.
Yeah, you've absolutely nailed it. Yes.
Nice. Yeah.
Yes.
It was the car. The car gave it away.
Yeah, big car giveaways on Oprah back in the day. That's why it was in there. It's good from ChatGPT. Did you get that, Johnny?
No, I was thinking Larry Emder.
Oh, yeah.
Bit more Aussie specific.
Yes.
Okay.
But you've heard the conspiracy theory around Oprah is that in the 2000s, they thought there was some potential domestic terrorism related to her. That's why she told everyone to keep on looking under their seats.
Wait, what? Is that a joke or a rumour?
I don't know.
Or a conspiracy theory?
Maybe.
There you go.
Well, there you go.
Yeah.
What a way to start.
I've never heard that.
Yeah.
Anyway, we should introduce you, Johnny, given we've got you in the room with us. Johnny Wilkinson is the co-founder and managing director of Equitise, a platform that some of the Equity Mates community may be familiar with, may have invested on before, but we'll go through the platform if people aren't familiar. But you're here because we're launching a new type of episode. An episode that I wanted to call Fish Tank and that Bryce promptly shot down. But you have a steady stream of startup founders coming through your door, and we are now getting some of them on the podcast to pitch their business.
It's a format that I think is going to be quite exciting because these are startups that are in their early stages, some are quite mature. I remember through Equitise, maybe 3 or 4 years ago, I looked at a company called West Winds Gin. Right at the time gin was taking off. I didn't make an investment. I think you could have put $2,000 in or something. Massive regrets because it's gone on to be incredibly successful. Yes.
Okay. Well, given we're talking about what you can do on the platform, Johnny, why don't you introduce people who are not familiar with Equitise to the platform?
Sure. So Equitise is an investment platform for unlisted equities. There's a number of ways we do it, but the main way is under the equity crowdfunding regulations, which are new laws in Australia that allow everyday investors to invest in unlisted companies. We also operate in New Zealand as well under some similar laws. So we were a part of getting these laws changed so that you, me, anyone over the age of 18 in Australia can invest often from as little as $250 in one of these startups. So we've raised just shy of $100 million for 120, 130 companies to date. Some of them, like West Winds Gin, was the second company we raised for in Australia under the Australian laws. They're doing well. Some other interesting ones are Car Next Door, which got acquired by Uber. That's probably one of the more notable ones. A few companies like Mad Paws, which listed on the ASX. A couple out of New Zealand that are listed too. So yeah, it's been an interesting journey and we've got lots of exciting companies coming up.
Awesome. Well, the great thing about these episodes is often, Ren, when we speak about unlisted opportunities on the show, they're very difficult to get access to for our audience. The great thing is the companies that are going to be coming in and pitching in this episode and over the months to come is that you will get the opportunity, if you're interested, to make an investment through the platform. So we're excited to bring the founders into the studio, but it's probably worth just contextualizing or understanding a little bit more about unlisted investments and what role they can play overall in our portfolios. So how do you think about it, and how should our audience be thinking about these type of investments?
Sure. So it depends on everyone. These are the alternatives in your portfolio, which can be anything from single digit percentage to some funds or some investors have more than half of their portfolio. So if you look at US endowment funds that have lots of money, lots of time, and can be quite careful in their allocation, they're willing to invest in some of these alternative assets because they know the benefits and returns are tremendous. So there's opportunities to invest in things that are uncorrelated to traditional market returns. So that's one of the benefits. It can reduce the risk of your portfolio and is an effective way of diversifying potential returns. And typically, over time, these assets will generate larger returns than the listed market equivalent.
Yeah. I think it's important to stress, though, that that's at a asset class level. But, the nature of venture capital is it's sort of 0 or 1 in many cases. It's you have a great outcome or you don't.
Definitely. And that's why we've set up the platform so that people can invest, might be in one company, but particularly if you're looking at building out a portfolio and looking at it as an asset allocation strategy, then you should be investing in 10, 20, 50 companies. And the probability of generating an IRR of greater than 25% is exponential as you start to add companies into your portfolio. So again, with a platform that's accessible, doesn't cost anything to invest in the way of fees. So you can, put 10 companies at $250 in a portfolio and build it from there. That's why we've set up the platform so that everyday people can get access and start building out that part of their, asset allocation.
Yeah, it does make a very inaccessible part of the market a lot more accessible, and we love that. The one other thing we should talk about before we actually hear from two founders themselves is just liquidity, because that is something to be mindful of when you're setting up a portfolio.
Definitely. So again, getting back to these are the sort of medium to long-term investments that you should be making. And the benefit and also the detriment of these types of investments is the liquidity. So you're not looking at a stock price moving up and down every day. So you're removing some of the potential emotional desire to sell something on a down day. This can be great for the companies because they're not fixated on what the stock price is, so they can focus on growing the company. But yeah, there's not always a ready way to sell shares in these companies. We have a product we're going to be rolling out soon with a few of the companies that have raised equity crowdfunding with us before that does allow some limited trading. We built this principally for Stone and Wood, the brewery, before they sold. So we're big believers in trying to create an efficient market, and a part of that is having some facility or some access to liquidity. But by the same token, people should really be thinking about investing this in a medium to long-term horizon.
Yeah. Generally, you get your money back when the company IPOs or when it sells.
Yep, they're the main exit opportunities. And we try and make that apparent with the deals. We also do the occasional IPO, so you can invest in IPOs. And we do actually do pre-IPOs as well. So there's more of a line of sight to an exit or a listing. We try and make that as obvious and articulate that in the offer, but it's always difficult and nothing's guaranteed around those sorts of things. We've had some companies that were raising a year or two ago with plans to list in the last 12 months, and obviously the market's been terrible, so they've put that on ice. We do have one of those companies that's going to be coming back, raising again with an actual line of sight to IPO next year. And there's more flexibility in how we can help some of these companies list. We can do things like compliance listings as well. So it's a bit more technical, but if they meet profitability tests and if they have the spread and other requirements to list, they can kind of go on directly, much like Spotify actually did.
Oh, okay.
Yeah.
Cool.
Well, Johnny, as we progress through this over the next few months, we're excited to get you back and unpack all things that are going on in the private markets. But I think it's time to bring in our first founder. Before we do, we must say that while we are licensed, we're not aware of your financial circumstances, and any information on this show is for education and entertainment purposes only. All advice is general. Before we get going, we just want to thank Equitise for sponsoring this episode. We thank them for supporting Equity Mates, and we do rely on our partners to continue to provide our community with free content to help you on your investing journey. Now, it is super important as well that we make it clear that you are about to hear two pitches from two founders, and there is no offer being made. You need to do your own research on these companies. And we want to make it clear that this is not personal advice. Any information in this episode is for educational and entertainment purposes, and it is general advice only. Now, Ren, the companies.
Yeah, so today we have two founders coming in. The first is Lara Lutati from Vitable. And then after that, we've got Joshua Brooks Duncan from Farmers Pick. We won't explain the companies. We'll let the founders do it. They'll do a far better job than we would. So without further ado, let's get to our first pitch from Lara about Vitable.
Lara, welcome.
Thank you. Thank you for having me.
Now, help us understand what Vitable is. What is it that you're trying to solve? What is it that you do?
Yeah, so essentially, perhaps I'll start by telling you a little bit more about my journey,
Yes.
which is quite relevant to why we started Vitable. So I was working in a startup. I was working quite hard, and I started feeling some symptoms that I think a lot of people feel on a daily basis, which is, brain fog, afternoon energy slump, waking up feeling tired, digestive discomfort, like all these things that we've all felt, I think. And I didn't know what to do. So like a lot of people, I just Googled my symptoms. And I went down the rabbit hole. There were so many different articles, so many blogs talking about different solutions. I just didn't know what to do. So like a lot of people, then I went to the chemist and I browsed through the aisles of similar bottles, and I just felt super overwhelmed. My chance was that I had access at my job to a nutritionist and a naturopath. They were working with me in my team, and they were the ones who started asking me very specific questions about my diet, my lifestyle, and just explaining in simple words how they could be impacting my health and creating nutrient deficiencies. And so it's through that kind of, having access to the science, but in simple terms, that I started understanding what I could be doing. And then they recommended a couple of high quality supplements that I took. After a few days, felt better. After a few weeks, my energy levels were coming back. And after a few months, I felt better than I had ever felt before. So for me, that was an epiphany. And I just realized that, that whole journey that I have been through, there was a way to just simplify it, make it accessible to all. And the way I decided to do it is by leveraging what I already knew, which was direct-to-consumer subscription model, which was the startup that I was working at. And so that's how we created Vitable. So really what we do is that we guide people with honest guidance by giving them an understanding of what they should be taking based on their lifestyle, diet, and health goals. And to do that, we do that through an easy quiz that you take on our website, ask you a few questions, and then we'll match you to a recommendation. So we've created an algorithm to do that, and we've worked with nutritionists and naturopaths to create it. So let's say you exercise a lot, you experience muscle cramps, and you have trouble sleeping, we'll definitely give you magnesium. You don't eat a lot of seafood and you get sick very often, it's very likely that you need zinc. So we'll just match you to the right supplements, and then we'll ship all your vitamins into daily sachets made from home compostable packaging, and then every 30 days to your doorstep. So you don't need to think about it, you don't need to open 20 bottles every morning to get your supplements, and also importantly, you don't forget to take them because they're in a grab-and-go easy format.
I love it.
Yeah, as someone who has a few half-open bottles of vitamins in my desk but currently takes nothing, I think I'm probably a perfect customer. Take us through the customer side of it. You mentioned that you go online, you do the quiz, but what are we paying, and every 30 days you said we get it delivered. So just talk us through the customer journey a little more.
Yeah, and just back to the point that you just made, you have a few vitamins in your cupboard that you're not taking. And so how do you expect them to have any effect, right? So that's really what we're trying to address here and solve, is helping people feel the effect of the solution that they went for, by helping them taking it every day as a start, and then obviously taking the right thing. In answer to your question, you go to our website, so vitable.com.au. You take a quick quiz. We'll ask you a few questions about your health goals first. So do you want to improve your sleep, your stress levels, or reduce stress levels? Do you want to take care of your joints? We have 12 health goals, and then we'll ask you a few questions to understand, to kind of narrow down why you may be not sleeping well, or waking up feeling tired, or why do you have joint swelling, by asking specific questions about diet, lifestyle, such as exercise levels, what type of sport do you do, are you vegetarian, etc., etc. And then based on that, the algorithm will match you to your recommendation, and then you can still adjust it. So if you're taking, fish oil every day and you want to add that to your pack, then you can choose to add it. If you're already taking magnesium, then you want to remove it. That's fine. You can completely customize it. And then you check out. And so our prices are just based on products. So if you have, we'll just add the price of each product. So as an example, our vitamin D might be, $9 per month. Our ashwagandha, which is a premium herb, will be $16 per month. Then you just add that, and everything else is free. So we'll pack your vitamins for you. Every order is made, is customized. That whole service is free. The delivery is free above $30. And you have also access for free to our mobile app, which helps you build healthy habits. So remind you to take your vitamins every day, track your progress so you see that what you're doing is working, and then obviously adjust your order, etc.
What's the average order price like on a monthly basis?
So it ranges. We have customers who order, your $30 order, and we have customers who, I was actually looking at it yesterday, who have $250 order every month. And so it really ranges. It depends on the user profile. Let's say, to give you a range, maybe between the 50 and 70 would be probably the average order value.
Do you check in? So I'm just thinking now, my lifestyle is X over the next 3 months, or it is what it is, but that might change. Can I then come back to you guys and say, I've actually started eating a heap more fish. I don't need the zinc. Or do you check in with people as they go?
Yeah, so you can actually, as your needs evolve, and it's a really good question, you can just take the quiz again and just adjust your answers, or you can reach out to one of our team members. So our customer care people are all nutritionists, and you can just, ask questions like your question about, not eating fish anymore and do I need zinc, and they can just help and guide you to make, the choice of your next pack, essentially.
So let's turn to the business story. When was it founded? How many years have you been in business? And tell us a bit about the growth and revenue.
Yeah. So we started Vitable in 2019. So we got initial funding from Rocket Internet, who are the same investors as, the Iconic or HelloFresh. They invested in March 2019, and then we launched our products and our service towards October 2019, so that was just before COVID, which was an interesting time. We then went on, so they kind of built our whole solution, which didn't exist at all in Australia. So it was kind of complex to build in terms of supply chain technology, but also regulatory landscape. So we did that. And then we grew quite fast to reach approximately $12 million revenue run rate as of June this year. And in total, we have acquired 100,000 customers approximately. And not only in Australia, now 25% of our revenue is done internationally. So Hong Kong, Singapore, New Zealand, Malaysia as well.
That's great.
So talk us through the competitive landscape, because Alec and I both were in retail, and walking down the health and beauty aisle, it seems like there was always a new brand coming, and it feels like in vitamins particularly, it is really about the branding and the marketing, because I would hope at the end of the day a magnesium tablet is a magnesium tablet. So how do you think about that, and how do you position yourselves against, I guess, the big brands that you can just walk in and buy off the shelf?
Yeah, very good question. So essentially our solution, so we're not another vitamin brand essentially, and really what we focused on when we built Vitable is to really address the main friction points of the current customer journey. And what they are, and I touched kind of briefly on that earlier, is the fact that people don't know what they need. They don't know what brand to trust. They don't know what dosage of vitamin they need to take for how long. That's a major pain point. And people still end up buying something, but that's one of the reasons why they end up in the cupboard, is also because they're like, I don't really know if I should be taking this. So that's number one. And then number two is if you take more than 2 vitamins per day, then you're like opening your bottles. If you can't take them on an empty stomach in the morning, what do? You can't take your vitamins with you at work and at the gym. So we solved that problem with the daily sachets. And then another friction point is, I forget to take my vitamins. I have them, and I just forget to take them. So again, you don't feel the results. And so that's why we're addressing with the digital solution. So really what we do differently from another vitamin brand is the fact that we mix a high-quality supplement and a digital solution, so technology solution, to help you build healthy habits and feel results on your health. And so through that, we also get a lot of data about consumers. So we understand their unmet needs, but in real time. So to give you maybe an idea, just an example, when COVID hit in March 2020, our suppliers contacted us and they said you have to lock in vitamin C and zinc. Everyone will want immunity products where everyone will run out, so you should just place a big order. But that's not what we were seeing in our data. Our data, which again, it's real time, was showing us that people wanted sleep and stress products because they were stuck at home because COVID was, there were no cases in Australia. And so people were just stuck at home and stressed and with their kids and, kind of overwhelmed. So we shifted our marketing and our communications to talk about how to reduce stress we developed also a sleep product that became a bestseller very, very quickly. And the big brands, the big retailers only heard about that or knew about that 6 months, 12 months later. So that's really, I think, a key competitive advantage is the amount of data that we have about consumer behavior, not market research.
So you've grown to $12 million revenue run rate in 3 years, 100,000 customers. Things seem to be going well. Why raise now, and what do you want to do with the funds?
So as founders, we always try to accelerate our growth and accelerate the delivery of our vision. So that's why we always raise capital when that's available. And what we did recently is that through our existing investors and new venture capital firms, we raised a convertible note of more than $7 million. And so we thought, I've known Johnny for a while as well. So we thought that it would be an amazing time to actually also open this round to our community. So as I said, we acquired 100,000 customers throughout our journey. We have customers who, love us, we have a 4.9 star rating on Trustpilot. People are super happy with the product. So why not also offer them the opportunity to be part of this journey and of our success by allowing them to become shareholders? So that was really the idea. And we also kind of see it as being a really good way to kind of create a little bit of brand awareness around Vitable as well through the crowdfunding.
Yeah. Can you help us understand, for those that are interested in becoming part of the journey, help paint the picture of what you think Vitable looks like in 10 years?
I can tell you about our vision. And from day one, I've always been very, very passionate about creating products and solutions that can help people achieve their health goals. That's really kind of the vision. And to do that, for us, it's using our ability to leverage technology and smart systems so we can help people essentially take the guesswork out of their health and well-being. We know that everyone is busy. We know that, not everyone has the time to do the research and to go to the stores. So how can we help people with convenient, simple solutions and also honest guidance, which I think sometimes is a little bit lacking in the industry. It's really hard to understand the science. It's really hard to understand how your body works and what would be good for you. And I think that a lot of brands, and not everyone, but I think a lot of brands unfortunately thrive on consumer confusion by creating, magic pills and solutions. But it's better that they don't really know, what's in it. So to answer your question, for us, it's putting together all the possible, products and solutions to help people address all the health goals throughout every single stage of their life journey. So recently we launched a prenatal vitamin as an example, and we're continuously developing solutions to help women and men at every stage of their journey. So whether they you start aging and you're thinking about menopause, for example, or you're thinking about joint health or bone health, we're just developing the best quality products and digital solution to help you find the right solution. Yeah, at every stage. And so
maybe we should have clarified this earlier, but when we were first talking about the business, I thought you would just be sourcing your vitamins from like wholesale suppliers and really delivering direct-to-consumer solution. But there you mentioned you're actually formulating your own vitamins and stuff like that. So tell us a little bit about the development side of the business.
Yeah, so one thing, it's interesting what you're saying, because it's a question that what we get asked a lot, where the vitamins come from. So all our vitamins are made in Australia, so manufactured in Australia, and they're our own formulation, so we don't buy white label products. And the reason behind that is, I think you said earlier, you hope that every, magnesium is magnesium.
I thought you were going to pick up on that.
Well, it's not true. Yeah. So you have different forms of nutrients that actually can be best absorbed by the body, and others that are harder for the body to absorb. And we always try to source, the best quality ingredients in the forms that are the best absorbed by the body. And unfortunately, it means it's not always the cheapest ingredient, but that's not where we're going. We really want to bring premium solutions to customers. So we work with health experts, so nutritionists, naturopath, pharmacists, to formulate our products. We choose the best quality ingredients, and then because we cut the middleman, meaning we don't pay retail margins, which are actually quite high, we're able to redistribute that margin into the quality of our products and give it back to the customer, essentially. So that's how we're able to do premium vitamins, but at a price that is super, super affordable, essentially. So we're the price of your standard generic brands that you would find at a chemist, but for quality that is actually much higher.
Well, it's probably worth just chatting about the deal itself, Johnny. Are there any sort of key call-outs? How much are you trying to raise? What should our investors know?
Yeah, so everyone can invest from $250. There's investor rewards and discounts and other benefits that people can get. And again, getting back to one of the benefits of equity crowdfunding is you get these brand advocates, you get people that are out there telling their friends about it. So it's a fantastic way of being a part of something that you believe in. The company's raising between $250 and $3 million on top of the $7.5 that they've already raised. And the offer closes on the 14th of September.
Nice. So you've got about a week or so if you're listening to get involved in that. What I do like is the investor rewards, which is pretty cool. So if you go onto the landing page, there'll be a link in the show notes. Lara and the team, depending on how much you invest, you actually get rewarded. So for example, if you invest between $250 and $999, you actually get a lifetime discount of 10%. It's pretty cool. And then it progresses from there. So the next one is if you invest between $1,000 and $2,499, you get that 10% lifetime discount, as well as free clean greens powder. Nice. And then it just continues.
All the way up to the exclusive jumper, Vitable jumper.
Oh, okay.
Premium.
So if you go 10,000 or more, you're looking at a 20% lifetime discount, free clean greens powder, collagen plus,
maybe just
anyway.
go to the website. Yeah.
Go to the website. A lot of bonuses if you do become an investor. But all that information is available on the landing page. The deal terms, everything you need to know, company overview, investment highlights, the team, financials, everything you need to make an investment decision. And Lara, thank you so much for coming in and being one of the first to be involved in our series with Equitise. We do really appreciate it and love hearing founder stories, and good luck with the raise.
Thank you. Thanks for having me.
All right, so that was Lara Lutati, the co-founder of Vitable. Fascinating company. We're going to take a quick break here, and on the other side, we're going to speak to another founder, Joshua Brooks Duncan. He is the co-founder of Farmers Pick. And they're trying to work on the massive challenge of food waste in Australia. Welcome back. We are doing a new type of episode here at Equity Mates. We are hearing founders come on and pitch their companies that are listed on the Equitise platform. So people like us, retail investors, everyday investors, can invest in these companies, which is exciting. It's making this whole world more accessible. Before the break, we heard from one founder, Lara Lutati, talking about her company, Vitable. Now we have Joshua Brooks Duncan talking about his company, Farmers Pick.
So in the studio today, we have co-founder of Farmers Pick, Joshua Brooks Duncan. Welcome.
Thank you. Thanks for having me.
So, Farmers Pick, give us the pitch.
Yeah, so in Australia, 2.4 million tonnes of food never leaves the farm, or that equates to about 30%. And the reason for that is it doesn't meet the supermarket beauty standards. So it's a little bit bendy, it's too big, it's too small, it's blemished, it's marked, and that food is left to rot on the farm, or if it makes it out of the farm, it gets sent to landfill if the supermarket knocks it back. So within Australia, that's a huge proportion of waste from our farms, and also a huge contributor to greenhouse gases and climate change. So at Farmers Pick, we learnt about that and sort of went, well, there's got to be something that we can do. So we set up a business that works really closely with these farms to take that produce, box it up and deliver it as a home delivery service, either weekly or fortnightly, to customers across the East Coast.
So I guess tell us a bit more about the story. Like, when did you first come across this problem? When did you found it, and what's been the journey from there?
Yeah, so we came across this problem in COVID, so 2020. My co-founder Josh and I were at a local farmers market walking around, and some of the produce there was a little bit interesting. Like, you know, there was some carrots with 2 legs, there's like big eggplants, you know, and you're like, I don't see this at the supermarket, so what's going on? And before that, we had no idea about this waste issue. So we did, a lot of research and learn about that problem, and then went, okay, something we can do. Let's just set up like a test business and see if there's a market for it. So we did that for a year, working in corporate out of like Josh's carport.
Nice.
For a week. And then we went, okay, we need a warehouse. Kind of built it from there. Into now we've got our own facility in Melbourne and Brisbane, and we're shipping thousands of boxes out a week.
Well, speaking of thousands of boxes, what's been the growth story? Tell us about the revenue growth, some of the sort of specifics around where you've come from to today.
Yeah, so first year we turned about 150K. That was while we were working our corporate jobs, doing 1 day a week. And once we took the plunge, and this is always the way, you like fully commit to something, that's when you start to see the benefits. So we fully committed, and the following financial year we turned 2.7 million.
Wow.
And then the FY that's just gone, we hit 7.8 million.
Pretty decent growth
Yeah,
story.
so we've had a lot of
How many boxes is that roughly?
So at the moment we're doing circa about 5,000 a week. Yeah, so we started at like 70, went to 700 in a week, and then kind of like scaled up from there. So I think, we had 200 to 300% growth within like 3 months.
And the growth story, there's 2 sides to this growth story. There's the customer growth story, and then the, I guess, scaling up with farmers as well. So tell us about how you've managed that, brought more farmers on, how they've responded to what you're doing, and then the customer growth story as well.
Yeah, so the farms like are a really key part of this for us. It's like one of the things that we see as a strength in our business is the investment and time and relationships we've built with the farms. Early days, it was pretty hard. It was like a kind of a foreign concept. They're like, why do you want that produce? But as we sort of visited, took more, they really came on board. And now we've built up a supply chain that basically covers us for all our product lines, and able to source in different locations throughout the year. So we've managed to build a really strong supply chain from the farms, and they've really been receptive to it. I think it took a little while, but now, we get phone calls every week from new farms wanting to come on board with us, which is great for us and also great for them, because they now realise that there's another market that they can move this produce in rather than just throwing it out.
So you mentioned briefly in the introduction the impact that food waste has on climate change. As food waste breaks down in landfill, it releases methane. For people that aren't as familiar with that story, give us a bit more colour on just the impact that food waste has on climate change.
Yeah, so as I said, 2.4 million tonnes gets wasted on farm. That's only a proportion of food waste in Australia. So 7.6 million tonnes is the total number of food waste within Australia. And like, just to put that into perspective, it's more than oil and gas production and flying combined. So it's a huge contributor to greenhouse gases within Australia. So the reason food waste contributes so much is when it breaks down anaerobically, so in landfill or buried without air to mix in, it releases methane, which is more potent, like it's 30 times more potent than CO2. So for food to end up in landfill is kind of the worst place for it to be. It's great in a compost farm because it can break down aerobically and doesn't release those those gases, but it's even better if it's eaten and consumed as it was intended to.
Ren and I used to work at Woolies and Coles, and while we were there, at least while I was at Woolies, they launched the Odd Bunch lines, which doesn't cover all fruit and veg and product, but it certainly covers some of your basics, the two-legged carrots and the odd-shaped sort of potatoes. So how do you think about that in the competitive landscape, and how is your customer different to, I guess, those that are going in and buying the Odd Bunch from Woolies and Coles?
Yeah, it's a great question, and something that we kind of watch pretty closely with what the majors are doing. I think there's a couple of things to look at here. The first is they do offer that. However, it's not in the same format as they offer their regular fruit and veg. It's in 1 kilo bags. It's completely separate. And if you want to buy that produce, you have to buy a kilo, or you've got to buy, 10 avocados or whatever it might be. So that's kind of the first element for it. They're offering it, but it's not in the fully convenient way that they offer their, let's call it, perfect fruit and veg. The second bit is there's sort of a disconnect for Coles and Woolies here to push this product, because it costs the same to grow a perfect zucchini as it does an imperfect zucchini. The return to farmers is less on the imperfect as it is on the perfect stuff. So if Coles and Woolies were to push this really hard, they'd be hurting their top line revenue, which would then hurt their bottom line profits on their fruit and veg line. So we do watch it, but at some stage, in some instances, it doesn't make a whole lot of sense for them to really push this and become a big player in the B2C space.
I want to come back to the Coles and Woolies comparison, because I think there's some interesting threads to draw on there. But I think before we get into that, we should just cover the basics of, I'm a customer, I go to farmerspick.com.au and I want to sign up. Talk me through the customer journey. In particular, talk me through what I'm paying as a customer, and compare that to what I'd be paying if I just rolled down to the local shops.
Yeah, so we've set up a fully online experience. So customers jump on, they sign up. It's a subscription service, so weekly or fortnightly, and that will just renew on whichever cadence the customer chooses. We've got 3 sizes. So our small, which is 6 kilos, or solo, our couples, which is 10, and then our family, which is 15. And they start at 36, 46, and 62. We sort of work the pricing on our solo boxes between break even and about 10% cheaper than the supermarket. Our couples box is about 20% cheaper, and then our families can be up to 40%, just depending on the time of the year and what produce is available. So yeah, there's some real savings for consumers to be had by buying imperfect produce.
Say if you went couples, is that $40 a week, or it's just when you order the box? Do you have to lock into a subscription?
Yeah, so it is a subscription, but there's no lock-in contracts. We're not a gym. Yeah. If you want to pause or cancel, you can at any time.
Nice.
So about break even to supermarkets, 20% cheaper, 40% cheaper.
Yeah.
When we think about the majors, they have incredibly efficient supply chains and still have incredibly razor-thin margins. So talk us through the unit economics for your business.
Yeah, so that was something that we sort of battled with when we set up. What is the most efficient way that we can do this in to make sure that we can pass on the cost savings to our customers? And we did that through a few steps. So the first is utilising existing supply chains. So the farms send product into the markets every day. They will just tack our product onto what they're already sending. So we kind of use that supply chain. The second is really quick turnover of product. So we receive something and within 48 hours, it's out of our warehouse and in most cases delivered to the customer's door. So we try and cut down the steps in the supply chain compared to the supermarkets, and that helps us save cost.
But I do want to drill down on that, because the challenge that all retailers face is the last mile. That delivering to a customer's door is incredibly expensive. So how are you adding that part of the journey on and still, making money?
Make money, yeah. So the last mile, we work with a third party to help deliver our last mile. The reason for that is, one, it gives us a really good geographic range. So we deliver pretty much all of regional Victoria and New South Wales, and then Brisbane, Gold Coast, Sunshine Coast. So if we were to do that ourselves, it would be a huge capital investment and fleet management and whatnot. So we tack on with a third party to do that. But also that means that we get the benefit, because they're aggregating volume, the rates are cheaper. So the more volume that we push through and that other parties push through, the cheaper rates that everyone gets and the cheaper it is to deliver.
So I've got one more question about the business, and then let's turn to the raise and how that's going. Subscription businesses, it's all about, getting the customer cheaply and then keeping them. So can you talk about some of those key metrics, customer acquisition cost, and then your LTV, your lifetime value. There we go.
Yeah.
And also, what's your churn rate been on subscribers so far?
Yeah, so that's an interesting point. I mean, all brands are out trying to find customers. And I think since COVID was pretty easy to find customers. Like everyone was on their phones. They had time. They wanted to try things. So we saw a really low CAC through COVID. Since COVID, we've had to adjust a little bit with our marketing. And one thing that we see is really beneficial is brand building. So we've spent a lot of time to build the brand of Farmers Pick and to make it notable. And we see that through our social followings. We've had a huge increase in the past 5 to 6 months, which has really helped drive traffic and awareness to our site and to our brand. So yeah, there's some areas in digital that are proving to return at low cost of acquisition. And I think with TikTok now coming through and that as an emerging channel, that's a space that we're looking at and continuing to play in. In terms of churn and lifetime value, I'd love to sit here and say we never lose a customer, but I'd be lying. Yeah, so churn, we see churn kind of go in cycles with us. So our product is best suited for consistency and routine. So when that gets broken, we see customers churn or pause or cancel, and that's usually around school holidays. So they break that routine. They go, cool, we want to eat out and go on holidays and whatnot. And then the challenge for us is then getting them back into the flow and the routine of getting a Farmer's Pick box every week. So I think for us, that's a really good area of focus for the next 6 to 12 months of how do we do that really efficiently. And there's some good learnings out there from the HelloFresh Marley Spoon guys who have been hammering this of how they do it and really trying to leverage that and what they do.
Nice. Well, Josh, let's so you're looking to raise through Equitise and give us a sense of what you're trying to raise and what it will go towards.
Yeah, so we completed a raise about 12 months ago and we got about 900,000 out of that raise. That we've used to continue to expand our business and customer base, which we've done, I'd say, pretty successfully. We've implemented a new IT solution and we've bought capital equipment into the warehouse to improve labour and pack cost. This raise really is about expanding our national footprint. We've just launched in Brisbane a week ago, and this raise is really to fuel that expansion, as well as getting some key personnel. I think one thing that we've learnt over the journey is you can do a lot and you can do things pretty quickly, but resourcing right and really focusing on it is the key to success. So that's what this raise will also support, is some key hires to help us grow and help us do it sustainably.
So we've got Johnny here from Equitise. Perhaps if you can just talk us through, for those that are listening and are interested, what are the specifics around it, how the audience can get involved?
Sure. So very easy. Come to equitise.com. There is a deal page for Farmers Pick, which has an overview of everything to do with the offer. So you can see the terms, you can see the price per share, the valuation, all those sorts of things. You can very quickly create an account, go through digital identification sort of stuff, like your old 100-point ID test, and you can invest. So any Aussie resident over the age of 18 can invest from $250. You become a shareholder, so you're buying ordinary shares in the company, much like you get on the ASX with a company. Only difference is they're not listed. So you buy shares and then you're along for the journey, and until an exit event occurs, they list, they're acquired, or something else happens, then you're along for the journey and get to be part of the success.
Awesome.
Great.
So we'll include a link in the show notes to that landing page. It's pretty comprehensive. It's got all the information that you will need as a potential investor. It is worth pointing out that the round closes on the 14th of September at 10 p.m, I think. So if you are interested, time is limited. I should preface that this is not going to be the only company that comes on to join the Equity Mates pitch sessions. So whatever we're going to call it.
Yeah.
And one final question from me, Josh. I think to help people that are interested in your story, what does Farmers Pick look like in 5 years?
In 5 years, we would be a national brand. I think we've always viewed this as a national problem. It's a huge problem and requires something that addresses it nationally. So we're going to be a national brand in 5 years. And the second bit of it is, like, as we mature in the fruit and veg space, there's an opportunity here to offer the option to buy other products which face a similar issue, such as long life milk. You know, if it's got 6 months on it, the supermarket won't take it because that's not long enough. So, you know, there's plenty of time to drink milk. So there's a heap of those things out there that we can start offering into our collection and then really start getting more share of wallet. So there's a geographic expansion here in 5 years, and then there's also a product expansion here in 5 years. And I would say within that 5 years, we'd have a pretty comprehensive product suite as well as the geographic range to service our customers.
Nice. Well, thanks so much, Josh. We thoroughly enjoyed that. A reminder that there will be a link in the show notes for you to check out the landing page on Equitise for all the information if you are interested in investing and going along on the journey with Josh and the team for Farmers Pick. So, Johnny, thank you very much. And Josh, thank you.
Great. Thanks, guys. Thanks for having me. It's been great to chat.
Well, we want to thank both of our founders for coming into the den, into the fish tank, whatever you want to call it. But we do need your help, Equity Mates. If you have a name for this segment or this episode, please hit us up at contact@equitymates.com or on our Instagram page.
And if you agree with me that this episode should be called Fish Tank, make sure you submit that and I'll try and convince Bryce.
Yeah, no good. But look, we really enjoyed having both of those founders in. Thank you, Josh. Thank you, Lara. And also thank you, Johnny. But we'll leave it there, Ren. We'll pick it up next week.
Sounds good.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs, or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.